Got it. Okay. Well, hello there. This is Michael Elliott with Porcupine Real Estate. And with me is Liz Going, who is a lender with Prime Lending. And the topic today is basically how do you get financing in New Hampshire? And in particular, how can you do it with low to no down payment? And so I mentioned to everybody this is being recorded, and so I don't know. I don't know how many people here, but welcome. So let's get started. Okay. I have to tell you, I am on a different computer, and while 2 minutes ago I had no problem advancing the slides, the slides won't advance now. This is fun. I wonder why. Amy, can you advance the slides? Because I just can't seem to do it here.
I don't have access to them, but you can press the right arrow key or the space bar and that should do it.
Yes, I did, but it's not doing it.
Make sure that's the active screen, Michael. You may have clicked on the Zoom link instead of the presentation. There you go.
Okay, so here we go. And this is what we talked about. And as I said, Liz is a loan originator, and she is with Prime Lending. Say hello, Liz. Did we lose Liz? Hello? Liz?
Yes.
Okay. Okay, just wanted you to say hi, introduce yourself.
Oh, okay. Hang on 1 second. Hang on 1 second. All right. So let me know. We've been trying to try with a different internet provider, and it's either way. My name is Liz Going. I'm a local mortgage loan officer. I work out of Prime Lending in Portsmouth. I primarily am working from my home in Manchester. And I also have a desk at our Bedford branch. So I'm wherever you need me to be, whenever you need me to be there.
So, all right, then let's move on here. How do I start the home buying process? Well, I think it's really important to understand that New Hampshire is made up of, it may not be a very large state, but it's certainly made up of parts of the that have very, very different aspects, whether you go north or south or east or west. And so I think that, you know, when you want to start the home buying process, you need to try to figure out what area has those aspects that are of a particular interest, because they really vary. And I mean, from a price point of view, or even from a government regulation point of view, as you go from the south to the north, prices for properties, similar properties, tend to fall off. Regulations and restrictions fall off as you go further north. Also, as you go from the East Coast inland towards Vermont, you get the same effect. So if you're looking for a place with a lot of acreage and very low zoning restrictions, you probably don't want to be looking in the Nashua, Salem type area, but you would want to be looking up in the Northwest type area. So it's very important to understand that. And I get a lot of people who come in to the state, and they want to see something, but they have really no idea of what it is they're really looking for. So I think it's really important that when you start thinking about home buying here, is that you really try to describe as accurately as you can what you're looking for. And then what Porcupine real estate will do is to take those parameters that you have and put them into a what we call a collaboration center or a listing cart, and you will receive on a regular basis updates as to what is available that sort of meet the criteria that you set up. And usually we want to start those carts with a fairly broad brush. And then as you start looking and getting an idea of what's available, the prices, the sizes, and the acreage, that we begin to narrow it down. And once you get an idea of a much better idea of what you're looking for, then come out here and come out on a Wednesday or Thursday or Friday, and so that we can take the weekend and set up things for you to see. By the way, if anybody has questions, I mean, just jump right in and ask the questions, and we'll try to respond. So here's the first question I have that Liz can answer, and that is, Liz, how important is it to have pre-approval?
So it is so important. And the reason being is because there's so many facets to lending. Everything ranging from where your money to buy the house is going to come from, to what type of income you have, and what income we can actually use, to your credit score, what's on your credit report. These are all things that a lender looks at during the pre-approval process. So it's really, really important to take a look at each borrower, see where they are, see where their credit is, see what they have for income, what do they have for assets, and to really determine their capacity for a mortgage, which is subsequently their budget. So it's really, really important because there's just so many little nuances to lending, and to really have that conversation up front to make sure that you're ready, that you qualify, and that you're able to buy the home that you want.
Yeah, and I might also add that doing that with a local lender like Liz is really important, because as she'll talk in a little bit, there are a lot of rules and regulations in terms of lending that are different in New Hampshire. So having a local lender, I think, is really critical. And where I've had problems before with my clients coming from out of states is when they're trying to work with a lender that is local to where they are now, like California, and to try to, it can become a nightmare. So yeah, I think it's really beneficial to everybody to use a local lender. And one more thing that we'll talk about a little bit later is that even when you get your pre-approved letter, you need to understand that that doesn't necessarily mean that you can actually try to make offers for a home at that price, because when we talk about the market, and we can talk about how much above listing properties go for. So if you have a pre-approval for, say, 500,000 as an example, you may want to be looking at homes somewhat less than that, to be able to take into account the fact that your offer may have to be accepted, may have to be higher than the listing price itself. Okay. So this is an interesting question. Can you really buy a home for zero down? This is the Liz show now.
Yeah, you believe it or not, you can. And just so that way everybody understands, there's kind of three buckets that your money goes towards when you buy a house, right? First is your down payment. Today we're going to be talking about low and specifically no down payment programs. There's the bucket that's for prepaids and escrows. I don't know if you know what an escrow account is. I didn't until I got into the business 7 years ago. So an escrow account's basically like a savings account attached to your mortgage. We have to make sure that at closing that's set up and ready to go. So when things like your property taxes and homeowners insurance come due, there's enough money in there to pay for it. The last are your closing costs. So you can buy a house with no money down. There are still going to be closing costs, but we'll also go over some of those strategies and some programs that are available exclusively in New Hampshire to help you if funds to buy a house is a hurdle that you need to overcome in your home buying process. Does that kind of set the stage for you?
Yeah, I think it does.
Perfect. So do you want to dive into them, I guess?
Dive in.
All right. So the first program that I'm going to talk about is VA loans. So for me, VA loans and first-time home buyers are my specialty. I'm one of the only 2 veteran mortgage advisors in the state of New Hampshire with extensive training as well as certifications in the VA home loan benefit. What that is for, it is for qualifying members of the armed services, whether they've served enough time, were honorably discharged. It's a really fantastic program for those members of the armed services, Army, Marines, Navy, the list goes on. And that is a zero down program. It's a zero down program that the veteran earned, and it's a benefit that they have for life. A lot of people don't realize that when you have a VA loan, you can have, first of all, multiple VA loans at a time. You can reuse your VA benefit more than once. It's not just like you use it once and it's done and it's over. And it also never expires. You could be 95 years old and use your VA home loan benefit. It doesn't go away after a certain amount of time served. And unfortunately, a lot of veterans don't know it. The day that they're getting discharged, they sit them in a room for 12 hours a day, briefly tell them, oh, by the way, there's this home loan benefit that you can use, and the service member is usually either glazed over by that time or that's just so much information that they just don't even remember it. But the VA home loan benefit is fantastic. It's a government-backed loan, which means the interest rate is a little bit better, typically, or lower. Shouldn't say the word better for regulatory reasons, but typically their interest rates are a little bit more favorable than conventional. Again, 0% down. If I could buy a house with no money down, I totally would. No monthly mortgage insurance for our veterans. And if a veteran has a service-connected disability, their VA funding fee, which in my opinion is the only reason why someone might not want to use the VA loan program, it can actually be waived if they have a service-connected disability of 10% or more. So that's a really advantageous program if you are, again, a qualifying member of the armed services. The next that we'll talk about, if anybody has any questions about VA loans, do we have any service members here? Or do we have any spouses of a service member or a surviving spouse of a service member? These are all people who could potentially qualify for a VA loan. Just to keep that in mind.
Okay, so we can move to FHA.
So I'll actually go to USDA next.
Okay.
So USDA is another 0% down program. It's backed by the United States Department of Agriculture. So there are some geographic limitations to it. It can also be called a rural development loan, depending on who you talk to. But this can be a really great option for somebody who's maybe looking to buy, out in the sticks compared to the city. In the state of New Hampshire, it's actually easier to rattle off the names of towns that a USDA loan wouldn't work in. Nashua, Manchester, Concord, Rochester, Portsmouth, Claremont, so on and so forth. Those big metropolises, which we don't really have a lot of in New Hampshire, but those big areas, a USDA loan wouldn't work in. However, if you're looking at places like Bow, Ware, Pennacook, Deerfield, these are places that the USDA loan very well could work. It's an interesting program. They're a little bit tighter on their credit qualifying. They don't usually let you spend as much money on debt as other programs will, but it can be a really, really great way to buy a home with no money down. It's also important to note with that program that there are income limitations to that program. In most counties in New Hampshire and designated areas, it's usually around 106,000 total combined household income for any household member who's 18 or over. But the median income in New Hampshire, I think household is like 90,000. So there's actually a lot of people that can qualify for that program. The last is FHA. This is a great option. It's also another government-backed loan. It can be great for buying a multifamily. It's pretty much the only program that's going to allow you to buy a multifamily for less than 25% down, depending on the units. FHA financing will allow you to buy a 4-family with just 3.5% down. Now, I know it's not zero money down, but there are solutions available from New Hampshire Housing that allow you to get up to 3%. Usually it's 4%. Right now they suspended 4%. It's just 3% of the base loan amount, which is what's left after your down payment, to go towards either your down payment or closing costs. So in essence, if you're able to utilize New Hampshire Housing, if cash is an issue for you, all of a sudden FHA becomes a 0.5% down program, which is pretty darn close to zero, which is the point of our conversation right now. How about that?
That's great. Now, all of these programs require some level of inspection.
Typically, yep. So FHA, it depends on the program. If we're going with New Hampshire Housing, all 3 of these programs are going to require a well water quality test if it's on a private well. Testing for lead, nitrates, coliform, E. coli. VA loans, they require a pest inspection on every property unless the property is in Coos or Grafton County. I guess it's too far north and too cold for termites, so they don't require it up there. I don't know.
I think that's the reason, yeah.
It's gotta be, right? Yeah. And then, USDA, they also as well, if the home is on a private well, they're going to want to see the well water test just to make sure that the well and that the water is potable and safe to drink.
And I mean, the FHA also, I mean, their primary concern is, as you mentioned, is mostly safety type issues.
Yes.
Yeah.
So typically, any government loan, so these 3 are the 3 big government loans. They kind of follow the HUD handbook, the Department of Housing and Urban Development, and they want to make sure that the house is safe and that it's sound. VA specifically states safe, sound, sanitary. But overall, a lot of them follow very similar property quality standards. If there's peeling paint, in New Hampshire, it's a unique state. Most of the houses here were built in, 17, 18 and early 1900s before vinyl siding was a thing. So, as Michael, being out there in the field, how many houses up here in New England are, cedar siding,
Yeah, exactly.
And what happens when we have such terrible weather and such extremes, it's 100 degrees during the summer and it can be -10 during the winter. It does a number to that paint that has to be on there to protect that cedar from the elements. So unfortunately, up here every, 7 to 10 years, these houses sometimes require a new coat of paint. So all 3 of these programs are going to take an issue with if there's peeling paint. I don't want to get too far into the weeds with VA loans and their ability to, request a waiver for those sorts of things. But typically, with FHA, if there's peeling paint, it's got to be remediated. It's either got to be scraped and repainted or removed.
Do we have any questions?
We do have a few questions.
Okay.
So first of all, I have a question about if, Liz, you've heard of V-Gage, I think it's pronounced VIEGAGE. It's supposed to be an alternative to a mortgage where they buy the home in a trust for the owner and then the owner makes payments. Instead of paying down a loan, you build equity credit.
I have not heard of something like that. That's not something that I offer. That is not in the realm of traditional mortgage financing. So that is not something that I know at all, unfortunately.
Okay,
but interesting.
The other question is it possible to buy a house without a down payment on just retirement income?
Yeah, absolutely. The big thing with any type of income that we're going to be using for a mortgage is we have to make sure it's stable, predictable, and likely to continue. So there are certain programs and certain calculations, and it changes from program to program. So whoever your lender is, if you're going to be using, if you're using 401k distributions or anything like that, let your lender know that that is your source of income, and they will pick a program for you that fits that situation. It's a good question.
Okay. Also, you it's becoming more and more common now for lenders to accept crypto. And do you want to talk at all about that? I think the issue there is being able to demonstrate the portfolio you have.
Correct. Yeah, crypto, it's so there's one program right now. None of these three programs are going to allow you to use cryptocurrency. These government programs, they won't allow you to use cryptocurrency. They also won't let you use income for the most part if your income comes from a marijuana derived business, because it's not federally legal. There is a conventional program in which they will allow you to use cryptocurrency as your funds to close. We have to convert the cryptocurrency into US dollars and see that deposited into your bank account. But the problem with cryptocurrency becomes the nature of cryptocurrency, right? We have to document who actually owns it and how you bought it, which kind of defeats the purpose of cryptocurrency to begin with. So the guidelines are pretty vague on it, but that's the big thing is you have to document ownership of the cryptocurrency, which unless you use a wallet like Coinbase right now is the only one that I know of that works really pretty easily for doing this, which, you know, I know most people don't really want to use Coinbase. So so it can be tricky. You know, the mortgage industry, we're pretty far behind. You know, we just started doing electronic disclosures and stuff like that. So, you know, we got a ways to catch up on. And, you know, don't forget too, that, you know, most of the money that comes from mortgages, you know, that's coming from the government, and the government needs to make sure that, you know, the money that's being used in conjunction with their money to acquire a property, you know, does come from a documented, viable source.
Thank you.
Mhm.
Okay, let's move on. What strategies do we use when making offers in a seller's market? Great question. And I think, I mean, it's almost a little difficult to get your offer accepted in a seller's market because, well, at least a few months ago, I would go to an open house and there might be 50 cars there waiting to see that property, and so and some agents, what they do, they will price the listing price of the property low enough so they attract all these people because they're trying to set up a bidding war. But there are things that we can do. And I mean, one of the things that Liz does on a very great basis is that well, you can talk about it, Liz, well, what you do in terms of helping the buyer.
Yeah. So for me, what I tell all of my clients, first of all, once I pre-approve them, if there's a house that you love and it's right on the cusp of what you're pre-approved for, please let me know. I'll run numbers on it based off of the most recent tax filings with the town to make sure that the numbers still work. After that, once you've located the house that you absolutely love and you want to put an offer in, I have no problem calling the listing agent and just letting them know how fantastic of a borrower that client is. Because during the pre-approval process, I'm very thorough. I look at everything that I'm going to need. I'm looking at bank statements, looking at retirement statements to go back to that. If somebody's going to be, you know, using retirement income to qualify, we're going to be looking at those statements. We're looking at pay stubs, W-2s. I even ask for tax returns from prior years just to make sure that there's not some sort of a Schedule C business. Maybe somebody's an Uber driver on the side and it costs them, you know, $5,000 of a loss that they're claiming on their Schedule C income. You know, we need to account for that as lenders. So I like to get in front of everything that I can as early as I can. So that way we can have those conversations with the selling agent to say, yes, we have verified assets. Yes, we have looked at the credit report. I have verified that there are no mysterious deductions from their payroll for maybe an undisclosed debt. I go through all of that, me and my team do, to make sure that our pre-approvals are as clean and thorough as possible.
Yeah, and I think the fundamental issue here is that in this seller's market, a buyer needs to act quickly. So often properties will come on the marketplace. There'll be an open house Saturday, maybe Sunday, and by Monday it's under contract. So that's why Liz said before, you got to have that. You have to have that pre-approval letter ready to submit at the time you submit the offer, and also. it makes it very difficult for out-of-state people. Like I have a number of clients that are living like California, Oregon, and they will look using our listing cart. They will see a property that comes up, and it's going to go into an open house over the weekend. There's just no way they can get to that property and see it. So one of the services that we offer is we can videotape the property, and I will go in there and with them using WhatsApp or Zoom, go in there and show them the property by video. And I would say maybe something around 20%, 25% of my clients have actually made offers using that technique. It's just otherwise it's just impossible for them to be here quick enough to be a viable contender for that property. Another strategy might be, you know, if you want, you may have to once you get serious about moving to New Hampshire, it may be a good idea for you to actually come out here and rent for a while and look around at the different areas and make up your mind and then purchase a property while you're actually here. In fact, I know that some people actually have actually purchased some multi-units and then you stayed in the multi-unit while they looked around for a property, and then moved out of the multi-unit, and then you know, use that as a income producing source.
Yeah, that's a great way to house hack. I think you guys have done a webinar on that before, right?
Yes, we have.
Awesome.
And the other thing I need to say is that money isn't always the deciding or the determinant of whether an offer is accepted. There are, for instance, if you can find a property where the seller needs to find suitable housing for themselves, which can take a few months to do. And if you're amenable to waiting for that type of period, then your offer becomes quite strong compared to somebody who wants to buy something right now and is not willing to wait. So money doesn't always make the decision of even in this seller's marketplace. Any questions so far? Okay, moving on.
Michael, do you find that, you know, your sellers, you know, we're talking about financing and things like that, but I've always wondered, as, you know, for me as a lender, you know, I work with financing all the time. If there's a seller out there and they're looking at a cash offer versus a financed offer, is there ever that concern as a listing agent or as a seller that the cash buyer could just up and leave because, you know, they're not putting some money in the game for appraisals, for inspections and things like that? Is that ever a concern on your side? I've always wondered.
I think it is. I mean, I don't think there's any doubt that the cash offer usually is seen as a superior offer to a financed offer. And the reason is exactly as you said. I mean, not only does the seller not have to worry about this appraisal process of the property is going to appraise, they also know that the period of time until closing will be a lot faster if they don't have to go through the lending program. So yeah, I think that's that sellers do think that way, but not always.
Yeah. Interesting. Yeah. That was my thought is, you know, it's like, you know, if somebody's going through the process of getting financing, they're pretty darn serious about that house. They're not just going to up and walk away.
Yeah, and so as a buyer, you have to I think you know you have to try to weigh in what your offer is, but keep in mind that there are probably going to be some all cash offers that you're going to be competing against. So find ways to make your offer as strong as possible. What's the current real estate market like? And I think we've talked a lot about this thing. it's definitely a seller's market. But what we saw a year ago or 4 or 5 months ago in terms of the increase in accepted sales price over listing price, the margins aren't nearly as high as they used to be. And in fact, I mean, there was a time, I mean, I know a couple of clients that went in for properties that were listed at 500,000, and they would offer $120,000 above that price and still get turned down. I don't see that happening as much anymore. I don't see, and this speaks to another issue, and that is what is called the appraisal gap. And that is that if you're borrowing money, you're going to have a mortgage, then you're going to get the lender to lend you money against what the appraised price is or turns out to be, not against what you actually offered that property to buy that property at. And there used to be a pretty large gap between, or could be a pretty large gap between those two numbers. And so when you in that time, when you were considering how much money you would have to put in, you have to not only consider the down payment, which Liz is going to make zero for you, but you also have the closing costs. And then you also have this thing called the appraisal gap. And in other words, if you have offered $500,000 for the home, it appraises at $460,000. The lender is going to offer you a loan based upon the $460,000, and so that difference between the two, in this case 40,000, is something that you're going to have to make up out of your pocket with cash. So it gets back to the point we made earlier. Just because you find yourself with a pre-approval letter that says we can lend you up to 500,000. You might want to consider the fact that when you start taking to these other cash issues into account, that you may not want to be looking at properties at the 500,000 range, but lower than that, so that you have the money to cover not only whatever down payment is, but closing costs, as well as to cover any appraisal gaps.
Correct. It's so important, especially in this market, to really work with your real estate agent and also with your lender as a team to negotiate those sorts of things to make sure that there is enough money for that appraisal gap. So very, very important point.
I have
Okay.
a question.
Okay.
This is Sandra. I have a question. So other than assuming that most people who are being financed get pre-approved, it's kind of the thing to do, right? Aside from that, would you say that the appraisal gap is the main reason some loans don't go through?
For me, with my clients, I don't just send them out into the woods. I can't speak to every other person, but if somebody's talking about an appraisal gap, we're going to sit down and get into the nitty gritty of what exactly you have for assets. Because what you disclosed to me on your application, maybe you left off your 401k and you really, really love this house and you really want to be able to cover an appraisal gap. And maybe the real estate agents don't seem to think that the property is going to comp, which is, comparable sales in the area. They comp them out against other properties. That at that point is when, we'll get on a call. Maybe we even get on a 3-way call. You, the real estate, and your lender should get on a call and discuss, what exactly you have for assets to cover in the event that the home doesn't appraise, and to what extent you have those assets.
So if you know what your assets are, and there aren't, any missing out of the picture, how frequently does an appraisal gap show up? And is there any way to, do your research ahead of time and mitigate that possibility?
So I haven't had too many of them. Work like Porcupine Real Estate. They are fantastic agents that really know how to comp out a property, and they really know the markets. So, if you're working with a real estate agent that knows what they're doing, they're going to be able to look at comparable sales in the MLS that they have exclusive access to in order to calculate those sorts of things. And Michael, I'll let you take that away, but I just can't say enough about the experience and finesse that Porcupine Real Estate has in these types of situations.
So comping out, if it's done properly, should really, that should be taking the gap out of the equation for the most part.
Well, here's the issue is that, and there's good news here too, and that the appraiser will go in and they have to use numbers that from properties that have already closed. And so they're going to be looking at properties that have closed, but these properties that they're looking at that closed may have been listed and went under contract 8 weeks ago, 9 weeks ago, could be longer than that. And in between that time, the market may have increased in price, but the appraiser is basically bound to look at numbers from these closed numbers. And so that's basically what's causing this appraisal gap, because even though the market isn't rising as fast as it used to, you can still get houses bid up over the listing price. And so as a real estate agent, what I do is I not only look at what I think the comp is going to be, but then I try to apply a factor on that, which says, what do I know about what percentage above listing prices on an average have houses been running in that area, and then try to use that number to come up with a number for the offer. It could then be that there will be an appraisal gap, but at least we'll have an idea of the size of the appraisal gap, so that when the buyer is making an offer, he or she can take that into account in terms of cash that they may have to come up with. The good news is that the last 4 or 5 offers that I have had have actually, the appraisal has actually come in right on target, and there has been no appraisal gap. So I think that what I'm seeing is that this appraisal gap is shrinking because the housing market is not as hot today, so the prices aren't being bid up as high as they used to be, and at the same time, the comps or the comps that the appraiser uses, which are the ones that have closed, are now getting more and more up to date to reality.
Okay, great. Thank you. That was really educational. Thank you.
Oh, you're welcome. Anyway, so that's pretty much what the real estate market is like today. It is cooling down. It is, but it's not flat by any means. It really depends on the area you're in. If you're in some remote areas, you're probably not going to see much of you're going to see the market pretty flat. And there are some really hot areas like Londonderry and some areas like that where we still have a lot of people coming in, where the market's still pretty hot. So it depends what you're looking for and where it is. Okay. What happens after my offer gets accepted? Well, let's see. You celebrate. because it's you probably have out competed against a number of other people, but what basically happens then, you probably are going to go through an inspection, and I as a real estate agent would never suggest that you don't do an inspection of the property, although I have to tell you at the same time that you need to weigh the risk of that not doing an inspection versus the strength of your offer. Because obviously, if I'm a seller and I'm looking at 2 bids on my property, and one says no inspection and the other says inspection, and everything else is the same, I will probably go with a bid that says no inspection, because there is lower risk that that buyer will be able to back out of the offer. So while I think that inspections are important, especially if you get to some of these older homes around that, and there are a lot of them around, and I'm not saying they're bad homes because they were very well built homes, but they require more maintenance than some of the newer homes. So I always recommend to do an inspection, but to be fair with you, you have to look at the trade-off in terms of what that that does to your offer versus the risk that you take if you don't do an inspection. So that's that part of it. Then you have to look at also the timing of this inspection. And if you buy a home in Manchester, you can probably get that inspection done pretty quickly, within a few days. If you buy a home in Pittsburgh, New Hampshire, which is on the Canadian border, you may have to wait for quite a while before you can get an inspector to come in and do that. And you have to consider that. Same is true with appraisal, because after the inspection, you're going to have the offer accepted. You're going to turn to your lender and say, my offer is accepted. The lender is now going to have to go get that property appraised. And I can think of situations where, like this, I wasn't joking about this Pittsburgh, New Hampshire thing, where 11 appraisers turned down the job, because who wants to go up to Canada to appraise a house when they can get plenty of business right in the big city? So it's going to take time if you're in the more remote area, and it's something that you have to understand in your when you're putting together your bid, how long this thing is going to take to close.
Yeah, I think there's one, maybe two appraisers that go up to Coos County, and the one guy takes his plane. So he schedules all of his appraisals around when he's going to take his plane trip up to the great North Country.
So yeah. So anyway, once the inspection takes place, if you have an inspection, the appraisal takes place, then it's going to go to underwriting, and then the lender will work with the underwriter to go through and make sure that all of the conditions of the pre-qual letter have been met. After that, then you go to closing, and so the whole process from beginning to end, depending on where the property is, and how much you want to have done with inspection, it can take anywhere from 4 weeks, 5 weeks, 6 weeks, out to 8, 9, 10 weeks. You agree with that, Liz?
Generally for me, I'm running at about 32 days right now from beginning to end in southern New Hampshire. But again, like you mentioned, if somebody's buying up in Pittsburgh or up in Coos County, just expect to add a little bit of time onto there.
Okay, anybody, let's see, what you going to go here? Oh yeah, questions. Do we have any more questions? Okay. Well, let's see. I really appreciate that everybody who joined us. Hope that this was an informative session, and please feel free to contact me or contact Liz, and if you have any questions, and we'd be more than happy to help.
I just
I
want
have-
to jump in really quick and say too that Liz had referenced to the house hacking webinar that Constance had done in the past, and that's available on our YouTube channel. So if you Google Porcupine Real Estate YouTube, you'll get our YouTube channel, and you can see all of our past webinars there.
I have one question. This is Sandra. Is there any way to look up houses that were on the market, and then you don't see them contingent or anything? It looks like they went on the market and got taken off. Is there any way to approach those sellers after the fact, if it was something you were really interested in, you were kind of waiting to see how long it was going to stay on the market?
Well, sure. The way it's sometimes difficult, in fact, often it's difficult to approach the seller directly. Many times they don't even disclose their names. I mean, I can dig through the deeds and come up with the names. So what I usually do in that case, though, is approach the agent that was the agent for the seller and try to see if I can get the information from the agent.
Okay, great. Thank you. Thank you.
Let's see. Okay. Anything else? Oh, next week is Pork Fest. So I don't know if you're able to come up to Pork Fest, but if you do, Porcupine has a huge tent and we have a lot of things that will interest you. If you can come there, please do and introduce yourself and let's see how we can help you. Other than that, Liz, do you have any parting words?
No, just thank you for including me. I know that we ran through and did a really quick crash course, in low down financing. If anybody has any questions, even if you think that you're a year off or 2 years off, or just want to sit down and brainstorm, I'm always happy to do that. And I'm really, really thankful for the opportunity. Thank you for including me. This is fun.
Well, thank you, Liz, and thank you everybody that participated. And I want a special thank you for Amy for setting this up and helping me with the technology. Thank you, Amy. You make my life easier. Okay, and hope to see you all soon.
Thank you.
So, okay, bye for now.